Hello and welcome to the podcast. Today we have Director John Coleman talking to us about the new Labour government's proposals and their impact on the land market. Welcome, John.
Hello.
Now, you've not actually been on the podcast before, so if you would like to give a brief introduction to yourself for those who are not lucky enough to know you already.
As you said, I'm John Coleman. I head the agency department of GSC Grays. My specialism is on farms and estate sales and purchase. I've been doing this for 35 years, most of which have been in Scotland, but the last 10 years have been in Northumberland, County Durham and North Yorkshire. So I've got the credentials, I think, to cover the market, and I've loved it. It's been very interesting transition from moving to Scotland to England, change in overall political views, but generally the basics of selling a farm business remain the same.
Absolutely. Okay. So the land market, it might be worth just sort of giving a brief overview as to sort of the changes that we've seen, because it's been a bit of a roller coaster, hasn't it, say over the past 5 years? What's sort of been the trends and what's led us up to kind of where we are now, looking at a new government coming in?
Yeah, okay. In terms of general farmland investment, it's been a very good asset to invest in over the last 10 years. And I do remember reading an article not so long ago where it was said that the value of farmland, or the investment in farmland, has been better than investing in gold.
Right.
And you can imagine how that went down.
Absolutely.
But it has been good, and the price of land has gone up consistently year on year for the last 10 years. It is definitely slowing down now, and that is due to quite a number of different things. The most recent changes have been BPS and the fact that is now non-existent. There's some delinked payments still to come, but the impact on farm businesses has been huge from that. And a lot of farms are looking at how that's going to influence their thinking going forward and how they're going to look at their farm business planning. And that has brought quite a lot of extra land to the market. If you measure it against last year's land stock, there's probably 100% more this year than there was last year.
Really, that much?
Which is significant. And that's what we've seen on the open market. Most of that is small parcels of land, 10 acres all the way up to 150, 200 acres. And most of it has been about debt reduction, trying to look at how the business can move forward, reducing the debt due to the reduction in income from the subsidy payments.
Okay.
Interest rates have also been a factor in the marketplace, and that has slowed investment down a little. But generally, where there is really good farmland, they've been well supported by the lenders, and those who wish to expand their businesses have been able to do so. And where there are more marginal blocks of land or even whole farm units, things are slowing down a little bit more, and there's been a lot more detailed look at the ability of that land to generate enough income to be able to support the repayments of any loans.
Yeah, everything has to be sustainable and profitable now, doesn't it? That's,
Much more so. It used to be all about loan to value, although that's still the underlying factor, but it's about serviceability now. I think that's the word that the banks tend to use, which is, can you repay the interest rates on a monthly basis? And if you can do that, then they are generally very supportive of changes to farm businesses.
Okay. So with that context in mind, we've got a new government, and they are suggesting some quite significant changes potentially to capital taxation. How might this impact the farm and farmland market?
Yeah, well, I mean, there are two main capital taxes which impact directly on the farms and farmland market. Inheritance tax is probably the biggest and most influential. We've been fortunate enough in the industry for a great number of years. I don't even know when it actually came in, but we have been fortunate enough to have agricultural property relief and business property relief, which farm owners have been able to rely upon in transferring ownership of their farms to the next generation. And that's why it was set up. Both main political parties, and particularly Labour, have always said that they wish to address non-farming owners of farms who are taking advantage of the APR reliefs. We have been expecting changes to this for the last 3, 4, 5 years, but they really are, I think, going to happen. We're not going to see them being removed completely because that will have a significant impact in areas where the market doesn't need an impact, and I'll expand upon that in a second. But generally, we think that the changes to Labour, and they haven't given details about this, the changes that Labour are going to put in place are to make qualifying for that relief a lot more detailed and potentially onerous. And it will always be about running a business.
Active farming.
Active farming is the phrase, but also actively running a business. And I think the two are going to be, we're expecting to be merged more so, and that those who have bought farms for inheritance tax purposes will have to look very seriously at how they run those farms going forward. Need to take advice on that pretty soon, I believe, even if what Labour is saying at the moment is they've got no immediate plans to change things. It is bound to come, and we've been expecting it for some time. And my recommendation is get your accountant, get your solicitor, and get your agent around a table and say, right, how are we going to run this business? How are we going to make sure that we can pass it on and that it ticks the inheritance tax box that we bought the property for in the first place?
Okay. And so do you think this is going to have any impact on the land market then? What sort are we seeing? Because it's certainly sort of very much topic of conversation and something that people are thinking about, is, you know, and putting it in the context of everything else that's happening. Do you think that means we're going to see even more land come to the market, or people are just still waiting to see? Or
I think we are going to see more land coming to the market, but it won't necessarily be all about inheritance tax. I think it is about debt reduction more than anything else. But yes, inheritance tax will get people to think about it. I think we need to be clear, changes to APR shouldn't affect bona fide owner-occupier farmers. And so long as that relief is not removed in its entirety, we're not expecting those people, owner-occupiers, to be put under pressure by changes to APR and BPR. Where it will have a big impact, or potentially could have a big impact, is on the tenanted and estate sector. And particularly for those farms which are on a post-1995 agricultural agreement, the loss of APR could be devastating. Most particularly to those who wish to become tenant farmers, because the incentive for landowners to offer their farms to the tenanted market will be gone. So we have to be very careful, the government have to be very careful about how they implement changes to this, because it could have unintended consequences that would really impact on that tenanted market.
So that's a component part then of the increase in land coming to the market, but not the whole story. And there does, as you say, there seems to be a lot more being offered for sale in the north this year. What are the other drivers then for people bringing land to the market? You've mentioned debt reduction. Is there anything else that's sort of encouraging people to?
Yes, I mean, the old adage has always been it's debt, divorce, and whatever the other one is. But it's debt is the important one. Controlling your costs on any business, and agriculture is no different there. And that is certainly the properties that we're seeing is the driver. Lack of succession is also another one, and I think that the next generation are not convinced that a career in agriculture is the way forward, and are looking elsewhere. And that's been ongoing for a long time. This is nothing new. And with the removal of subsidies, which has kept most of our farms solvent over the last few years, with that gone, the importance of being a very good farm business manager has grown hugely. And I think unless you are completely wedded to the whole idea of farming as a way of life and wish to focus on how to get the most out of that business, it's going to be a struggle. And I think a lot of the next generation's heads are turned by other opportunities. And it's going to be a problem. So we are seeing farmers on a regular basis and families sitting around the kitchen table working out what they're going to do because their children simply don't want to take it on. And that's your next biggest one. Sadly, divorce is an issue, but not so regular. And there are ways around how you manage those assets. But that is certainly something that drives our market too.
And then something that has been driving market prices, and something that you've talked about on quite a regular basis, is natural capital and investors looking to buy up land in order to deliver landscape scale projects. Do you see this continuing under the new government? Is it going to keep prices? You know, we sort of talked about a slowdown potentially in the prices, but are they going to prevent the market from taking a downturn? Is there still that demand there?
I think so, but I do think that there has been a considerable amount of education from those who are in the market to buy land for natural capital purposes. When ESG funds were created, and this is what's really been driving scale purchase of land for natural capital, when money's raised in the city to create funds to buy land, the issue with the UK is we don't have enough land to supply that market.
Yeah, that's right.
There are also planning restrictions on being able to afforest large tracts of land. In our area in the north, we have 3, if not 4, national parks, and additional controls there make it difficult to be able to focus solely on the natural capital benefits. It is, however, a significant new asset, in inverted commas, that can be valued now in the ownership of this and the purchase of this land. So I see it going ahead. I think, as you said before, scale is critical to these guys. But what we're also seeing is at the other end of that is the smaller operators. You have NGOs like the Wildlife Trusts. You have smaller companies set up focusing on a market which is in its infancy, based around biodiversity net gain and nitrate neutrality, and the requirement to create credits which allow them to develop land which they've purchased. Now, again, we have been planning for this market, and there is trade within it. The previous government have also set up a process for the creation of credits, and those values have been set by the government should developers be required to buy them because they can't do a deal in the open market.
And any that have gone out to market have been bought up, haven't they? That, you know, sort of any.
Yeah, they have an auction twice a year, and most of them are bought.
Yeah.
But it took a bit of while to get some momentum. The smaller scale ones, most developers and builders are trying to cover the BNG requirements on site, but that means that they have less of the land that they've bought for development purposes to be able to build houses on. And so I think there will be an issue with the government's new housing proposals, because I haven't seen anything written about how they're going to change the planning in relation to BNG and nitrate neutrality requirements.
That might drive the market even more.
Well, that's the issue, and I think, you know, there are still hurdles no matter how much easier you make the planning process. And I don't think anybody suggests that putting back more than you take out in the way of biodiversity is a bad thing. It's just, how do you present that to the market? Do you buy it off-site? Can you create landscapes nearby which offset that? And I think that market is still very much in its infancy, but I expect that to grow, and I expect farmers to be looking at getting base values and ecology reports on their current farming system, because these credits are created on the change, taking basically land out of food production and stopping the inputs.
Is that something then that's brought into consideration when, you know, you do bring some land to the market? These ecology reports, baseline, you know, the natural.
It depends a little bit on the farm and the land, block of land, but yes, we've done a number of these over the course of the last 12, 24 months, and getting that baseline does allow us to attract that particular market. I think you see a lot of adverts now saying natural capital value, and so, well, that's all very well, but how have you established that? And I think if you're going to go to the market to offer land for that purpose, then you need to have established that baseline, so that people can work out what additional value over its agricultural value there might be.
Okay. Perfect. Right. So then what's our advice to clients then? You've sort of talked about getting the accountant, the solicitor and the agent round the table. And we're obviously seeing a lot of farmers at the moment, particularly through our FBAS scheme, and, you know, debt management is a key consideration. But what are the other things that we're saying? You know, when you're talking to clients just now, what advice are you giving them?
Planning. Try and get ahead of the game. Change of governments do focus minds, and anticipation for change in legislation and change in the fiscal system is always something to be wary of. And maybe that's the catalyst for having that meeting now. But there is no doubt that we have more success when we are selling clients' properties, when we've had a chance to plan for it. so that we get it all right, not just in terms of squeezing the last drop of value out of the farm in the open market, but also by adding value before we even get there. And value can be added in all sorts of ways, not just the obvious sort of building or getting planning consent to convert buildings, or doing up the kitchen before you sell, all of those things that one might consider and have a direct impact. But it is also looking at those tax implications.
Yeah.
If I were to split it, does that make a difference in terms of my tax burden at the end of the sale? So the more time we can get involved, more time we can get in advance of a decision to sell the farm, the better. The more and the earlier we can get the accountants and the solicitors involved to prep properly, so that when we have an agreed sale, it gets from that right, you've got a deal, to exchanging contracts as short as possible. That is what drives our market, and that's what will make us continue to have a good market, and a market in which there is confidence in both buying and selling.
Okay. Very sound advice indeed, John. Is there anything else that you would like to add, or that you think that people should know?
No, we didn't go into detail on capital gains tax. The potential changes to that are quite large, and I think of all of the taxation changes, capital gains tax is going to be impacted. They are talking about linking gains tax now to your income, and that could go from 20%, which you currently pay on selling a farm, or the gain on selling a farm, to 40 or even 45%. Now that is a significant difference,
Isn't it?
and I think that it is really important that we plan for that. There is no detail on rollover relief, which is what most farms rely on, and you can roll those capital gain into qualifying business assets. What do those mean? Are there going to be changes to what are qualifying business assets? Again, the tightening of the rules, I think, are going to be the key to all of this. And quite frankly, the devil will be in the detail.
Yeah, well, we've just got to keep our eyes peeled and keep our fingers on the pulse of what their new plans are.
Yeah, agreed.
Okay. Well, thank you very much, John. It's been a really interesting conversation. On future episodes of the podcast, there will be more on the new Labour government and their proposals and the potential impact on the agricultural and land management sector. See you then.